Is Betty Kiptum. For the next 2 hours, we shall be talking about the highlights of the 2025-2026 budget that is set to be read next week on Thursday, the 12th of June, 2025. And in studio with me is a very able panel. I will start with the gentleman on my far right, that is Alex Kanyi, who is a tax and exchange control partner at Cliff Decker Hofmeyer, that's CDH Kenya. Right next to me on my right is Kenneth Kahora, who is a tax manager at PKF. We also have CPA Dennis Mutitu on my immediate left. He is the member of Public Finance and Tax Committee at ISPAC. And on my far left is Leonard Kafafa, who is a governance and policy expert. Thank you very much, gentlemen, for joining me. Karibuni, 4.2 trillion shilling budget thereabouts. The biggest budget Kenya is going to have this far. I will start with you, Alex. What do you make of this number?
Well, I think we continue to spend beyond our means, looking at the huge budget that we have for this year. We've already seen government targeting, budgeting for a deficit, basically, in terms of how much they're able to collect in terms of revenue or even aid or grants, etc. So we also kind of budgeting to borrow to support that kind of 4.2 trillion budget. And it's been interesting to see various permanent secretaries or PSs appearing before the committee in Parliament and trying to justify even more spending, and trying to say we've seen some certain cuts and they're not happy with such cuts. So it's an interesting time, where we are living beyond our means. Living beyond our means.
Kenneth, I'd like to hear your views. Do you agree?
Yes, I actually do agree with that. I think we've been seeing the budget increasing each and every year. Well, the government always sets a very large target, but as we go through the year, depending on what the collections have been able to get, then they may change the, issue a supplementary budget, push expenses from here to there. But what we've seen is the government at least has taken a move away from using the finance bill to sort of try and collect a lot of additional revenue. This time we're saying they're just trying to streamline, clean up a few sections here and there, and basically try to align to international best practice in some cases. But as we've seen in previous periods, there's still a lot of engagement. That just ended last week. And out of that, we'll expect to see what additional changes will have come from the Committee on Finance and Planning.
Thank you, Kenneth. I'll come to you, CPA Dennis Mutitu. Just tell us, as he said, there's a lot of public participation that has been going on. I think Kenyans are more aware of the budgeting process now. What is your view in terms of the budget that is going to be presented?
Yes, as I can say is that the budget itself is too huge, if I can say, because we have been seeing them budget be increasing every year. So the other issue is that people are being taxed up to the last coin. So that's why you can see in this proposal, they are more, they change the approach in a way that now they are exempting, they say isolating, exempting, and also taking other goods to vatable. So in this budget is that they cannot increase more taxes since your disposable income has already been taxed up to the last coin. So they must change the approach so that now they can be able to raise the revenue. The way also they have already gone to the issue of debt financing. We'll be seeing a lot of maybe treasury, but also borrowings from external. Yeah.
Right. Kafafa, your thoughts?
Just amplifying a bit of what my eminent panelists have said. My thoughts, though, are that it's the government's attempt to broaden the tax base, because when you look at the people who pay taxes in this country, and you look at the number of PINs that we have in this country, we have about 8 million PINs, that is personal identification numbers. About slightly more than half of them are for companies, corporations, and about 3 million thereabouts are for individuals. So it means that there are a lot of people who are not in the tax bracket. A country of about 54 million, with roughly about 15 million people eligible to pay tax, leaving that burden on just about 3 million people is an inordinate burden on those people. So I think this is an attempt to broaden the tax base. so that we have a lot more people coming in to pay their fair share of taxes. That's my take.
Right. Broadening the tax base. We know that KRA has been given around 3.3 trillion shillings to collect, and over time they have been missing their collection targets. Is this overly ambitious for the taxman? I'll start with you, Kanyi.
It is. I think I've been quoted on a different platform, basically saying we actually don't know how they even meet the target. Because we think even the ones they've met before were actually set too high. And having been in this for quite some time, we realize Q1, they'll be behind budget. Q2, KRA is still behind budget. Q3 are still behind budget. And we're just about to close the year, Q4. Suddenly, there's a miracle. And we've now met the target in terms of revenue. So I think they're also very stretched to just collect that revenue. And then the reaction is, you find, for example, some officers who are very aggressive when they're coming to do their revenue audits. We see Kenya Revenue Authority also kind of adopting technology to try expand the tax base, as it was being mentioned, to just try and ensure that everybody is within, for example, the electronic tax invoice management system, which was introduced in 2023. So you just see an increased effort to make sure that those who are paying more, and those who are not paying are now caught within the net. Is that sustainable over a long time? Over a long term? So I guess that's the question, because you cannot tax yourself to wealth, as it's been quoted before. So the struggle really continues. We must find a balance of how do we make our tax climate predictable without necessarily increasing taxes over time, to just ensuring that the person who is already complying complies easily and is facilitated to comply, and two, they see value for money so that they're also happy to contribute in this basket called tax. Yeah, and that then makes the work for the Revenue Authority a little bit easier if someone can actually see the value for the service,
right,
for the monies that they have paid. It will be a tough time in this coming year if we go with this particular budget of 3.3 trillion. You can imagine the kind of stress that the Revenue Authority will have and what they will need to do to just get to that target.
Right. Of course, people who are salaried have been taxed dry, so to say. Yeah, people with pay slips have been complaining, and now the government seems to be moving into other ways of expanding that particular tax bracket. I'd like to hear from you, Dennis, what the government can do to balance these. As he says, people need to see value for their money.
Yes, if I can start with the way we usually, our tax system is unpredictable, because you can wake up today, an item is zero rated, tomorrow is vatable, then let's say the next financial year is also exempt. So we don't have a predictable tax policy in Kenya. Another issue is that the way you are saying is that as we are widening, the way you are saying, the approach nowadays is to seek those tax loopholes. I think Mr. Kanya has also mentioned about e-teams, where that every receipts must pass through electronic tax management system. But on the other hand is that we are pushing more on enforcement. The way we are saying that KRA was able to reach the target due to some of its enforcement. We had another, I think 2 months ago, the issue of special table, where you are going to claim an input tax and you find your PIN has already been suspended. So on that measure, other measures like when you are going to file a return, you find that some of the invoices does not belong to you, but you end up filing because it's an auto-populated return. We have a lot of measures that have been put alongside by KRA, and some of them we may say some of them might be illegal in such a way that they don't follow the law. So enforcement measures sometimes lead to, they can raise revenue through those measures. But as we can say, are they sustainable in long time? Yeah. That
is the big question. Are they long-term sustainability of the taxes that we have? Kafafa, your thoughts?
We don't seem to have too much of a choice as a nation at the moment. We are heavily in debt. That's the elephant in the room. A significant portion of these tax revenues that are being raised, these revenues are going to pay public debt. I think close to 1 trillion shillings of debt that is due in this financial year. So that's quite a bit. And as you well know, public debt is not a question of, it's not an option. By law, it has to be paid. In fact, the first charge on the consolidated fund, where this tax, all these revenues go, is towards the service of public debt. So we don't have a choice. We have $1 trillion that we must pay. We have other things that also, other programs that also have to continue disbursements to counties, schools. Basically, the whole budget has to be funded somehow. And the only way it can be funded is by we, the sovereign. So we don't really have much of a choice. But as my colleagues are saying, the approach is what may need to change somewhat so that it's a little bit more friendlier, so that we don't really have to use a stick to beat people into paying taxes. People then take it upon themselves as a civic duty to pay taxes. I think that's the approach that we are looking for now.
Right. We shall be discussing debt in depth in a little bit. I'd like to hear from you, Kenneth, your thoughts on expanding that tax base.
Yeah, very good question. And I think this has been an issue that the Revenue Authority has been trying to deal with. Because one thing about also collection of taxes is that it needs to be, it cannot cost more to collect the tax than the actual tax that you're going to get. So in as much as they're trying to expand the tax base, you find that there's only certain points that you can get to. Yeah. So as Alex had mentioned, you have something like eTIMS that's able to auto-generate, like you generate invoices that the Revenue Authority has a good visibility on. Another thing they introduced is for companies that they require to have eTIMS invoices to get a deductible expense on that. So with that, it has forced people to sort of have to comply and in some sort of way widen the tax base. Because what happens for that company that is actually getting a service from somebody who has not been in the tax net, they actually are allowed to raise a reverse invoice, yeah? So with the PIN of the taxpayer, so that way the Revenue Authority is able to expand. I know there's a lot more that can be done, in terms of trying to expand this to the Juakali sector and, the farming. Though we can see there's some things that they're trying to introduce that is also going to net a lot of these people who are previously not paying taxes, but now they're going to come visible to the Revenue Authority.
Right.
Yeah.
As tax experts, I'd like to hear from you what stands out from the finance bill in terms of the tax options that they've taken this time round. Start with you, Kanye.
Do you want me to start with the positive or the negative? Anyway, yeah. I think I want to start with the positive ones. Yeah, I would pick the one for advanced pricing agreements, and basically what that means is that a company, and especially a multinational company, the way it does business with another company, say in the UK, and these two companies are related, just as an example. So you have a company in Kenya and a company in the UK. They are trading. Perhaps they're bringing stuff into the country, and also they're also distributing to other non-related entities within the country. So what happens is then within an advanced pricing agreement is to say, this is how I'm doing my business with related companies. For example, if there's a markup, this is the markup that we are applying to our services or to our goods. We have benchmarked, so it is actually like a market markup, yeah? Or it's something that is aligned with if I was to provide that service or good to someone else in the country or getting it from the UK. So then I get into an agreement with the Kenya Revenue Authority to say this is how I've structured my businesses and my related party transactions, and then we agree with KRA that the pricing is right. And then we lock that for a period of like 5 years. What does it do? It increases predictability for multinationals, number one. Number two, it reduces disruption because of things like disputes with the Revenue Authority. They don't come back to you, say in year 2, and say we want to audit you because we don't think that your business is well structured. So I think that is a very positive change. And for employees, and especially for those in government who are getting per diem, there's an increase of a tax-free limit from 2,000 shillings per day to 10,000 shillings per day. Again, that's
for the private sector, yeah?
No. Even in government, whoever is receiving per diem, yeah? Mm-hmm. So you get a tax-free limit of 10,000 per day, which is a good thing, if you were to ask me. Of course, there are other things which we think needs to be looked at, and we think actually they need to be removed entirely. And I think I'll just pick two things. The first one I will pick is on allowing the Revenue Authority to access trade secrets and personal data as they're doing their usual audits for businesses, because we don't feel that they actually need those trade secrets and personal data for them to raise an assessment. If I give them my bank statement, if I give them my audited accounts, they should be, and plus you have your e-Teams, electronic tax invoice management system, they should be able to tell how much I'm making as a business and come to a reasonable conclusion as to whether I am overpaying, underpaying, or just paying the correct amount of tax. So this access to trade secrets and personal data is something that we are against. The other one we are against is the one we call like a pay-to-play position that they want to introduce with this particular Finance Bill 2025. Basically, I'm in disagreement with the Kenya Revenue Authority. There is an assessment. There is an assessment of, say, 2 billion shillings. We go to the Tax Appeals Tribunal. For one reason or the other, KRA wins. Meaning, the tribunal says 2 billion is actually due from me. Of course, the next step for me as a taxpayer is to go to the High Court to appeal and say I disagree with whatever has been said by the Tax Appeals Tribunal. So basically, and I have that right under the Constitution to appeal up to the Supreme Court if I want. And that's a guaranteed right in our Constitution, right to a fair hearing. However, now the change is to say if I move then to the High Court, the Revenue Authority will be allowed to issue agency notices to my bank or to anyone else who owes me money, even as I rush to the High Court. What do agency notices do? It's basically like a notice to your bank to say, we were with this guy at the Tax Appeals Tribunal, he has lost. Bank X, you're actually holding 500 million for this person because he operates an account with you. Give us the 500 million now, even as the guy moves to the High Court. What does that do? Cash flow problems. What if the decision is overturned by the High Court? You know, getting refunds from the Revenue Authority is just painful, terrible, and long. You know, it takes just a long time, yeah? So that's something also that we are against, to say that needs to be removed to guarantee the right of a person to actually appeal to the High Court and get a fair hearing until a decision is made. That's when then KRA should move in to basically enforce or collect the tax. Yeah.
Anything to add, Kenneth?
Yeah, I think that is actually a very interesting provision where they'd want you to sort of pay to play. Yeah? So, and you see, it's sort of very inequitable if you look at the two entities. Yeah, because what happens is, if the KRA loses, there is no, there is no consequence. But if the taxpayer loses, then you have the KRA coming to enforce that. And the question is, if at the point that your case is being listened to, remember your assessment is continuous earning interest. Yeah. So from you look at it from the perspective of the Revenue Authority, they actually still gaining. The assessment keeps increasing, yeah? The amount that will be owed to them. But if you look at it on the other end, if you end up paying them, they have taken the money from the bank. At the time of trying to get that money back, now you have to again start, applying for, the refund or what you call for you to be reimbursed. So it is actually a very long, complicated process. Maybe another thing I'd want to add is some of the inconsistencies we are seeing in terms of policy. So, like we're seeing manufacture of motor vehicles locally. We're seeing they had actually introduced some incentives to it, and now we see the Finance Bill 2025 trying to remove them. If you look at specialized hospitals, there were exemptions. Now those are going to become standard rated in terms of. So there's a lot of things that we look at it and you wonder, okay, what is the government policy on this? Are we focusing on universal healthcare? If it's universal healthcare, can we make policies that are going to encourage investments in that sector and also not make things expensive? You see, when you move drugs from exempt from zero rated to exempt, you sort of increase the price of that medicament, because what happens is the input VAT that was incurred when they were manufacturing that drug is not going to be able to be they'll not be able to receive it back So what happens is that you're having things becoming more expensive at the point that the government should be focusing on how are we going to make life easier for the Kenyan people. Yeah.
We shall talk more about the government's beta agenda, the focus of the bottom-up economic transformation agenda. There are quite a number of pillars there. UHC is one of them, but this particular move seems to be going against what they've been standing for. I'd like to hear from you, Kafafa, in terms of this move to look into people's secret data or just personalized data. Considering that KRA has been trying to reduce the trust deficit with the public, is this going to worsen the situation?
This is an ongoing conversation. Let me start by saying that it's an ongoing conversation.
Yeah.
I think there's a lot of give and take, and I'm fairly confident that at the end of the day, a proper policy framework will be arrived at that does not allow the government to look into people's personal issues inordinately. Yeah, I've had people even say that M-Pesa statements are going to be audited and people are going to be forced into compliance looking at the M-Pesa statements. From where I sit, if you have nothing to hide, then you don't really need to fear whatever is coming, you know. You don't need to fear giving out your M-Pesa statements and that sort of thing. But as I've said, I think it's the policy framework is still in development, and we in the fullness of time, it shall be satisfactory to every stakeholder. But let me just add to what our colleagues have said about the positives and the negatives of the bill.
Right.
My negative aligns with my view aligns with what they've said about the negatives, particularly when it comes to this confusion between zero rating and VAT exemption. There's quite a bit of confusion, and that's a policy that needs to be defined clearly once for all, so we don't keep having this back and forth creating confusion. But on the positives, I single out three positives. One is the significant economic presence tax, where the tax base is expanded. The scope of the tax base, the scope of the taxation is expanded to include businesses that operate digitally. Like, for instance, we know there are a lot of online businesses that make a lot of revenue, and that revenue passes untaxed. So there'll be quite a lot of that. There's also a lot of e-commerce that needs to be looked into. In terms of bringing all these e-commerce traders into the tax base. Then we have exemptions of pensioners. I think that's a great thing, because pensioners are people who've worked for 35 to 40 years. They've given their best years to the country, and they need to retire in some form of dignity. So when we exempt them from taxation, it's a really good positive, because that way they stop also being a burden. You know, you've heard of this black tax where you have retirees who still have to depend on their working children or their working relatives for support. So when you give them some relief by way of exempting them from taxation, you reduce that aspect of black tax. It's a positive. Then you have also the fact that small businesses can now deduct the cost of tools and equipment within that year. So that's a positive. So those are the three positives that I would look at for the moment.
Thank you, Kafafa. Yourself, Dennis, thoughts on that, as well as KRA trying to, have a positive relationship with the taxpayer?
If I may start, I think I can point out on the issue of now, we are talking on three terms: exempt, zero rating, and vatable. If I can take through is that zero rating means we have zero VAT. Exempt, that item is not chargeable to any tax. Then vatable, we mean 16%. So the moment we say, let's say we take an example of a bottle, where we say that the bottle is being exempted, meaning any tax that you incur along the process, you don't apply for a VAT. When you say zero rate, meaning that this bottle, you incur the cost of purchasing, you also incur the VAT on the cost of purchasing, the VAT on transportation. You claim that at what you call, there's a platform where KRA usually have that window where you claim that input, all the taxes that you incur along the process, then you are given a refund, or you are being told to offset your future liability. Meaning that when the item is related, it's cheap, but when it comes to an exempt, it is now all the costs, you pass them to the end consumer. So that's why we usually advocate for things to remain as related, but once they are turned to exempt, they become expensive. So I think I wanted to clarify on that. On one point is that we can talk about the employee reliefs, and since now the disposable income, as we said that we are being taxed to the last coin, there's a proposal where that the employee can claim down the reliefs. Let's say you have an insurance policy, you just take to the employer before he even deducts you you can be able to claim those tax, let's say the tax that you are being paid under the insurance. The other point was the issue of digital tax. I think now the digital asset has been down from the 3%. I think the Bitcoins, the WorldCoin, you are now taxed at a rate of, they are proposing to be taxed at a rate of 1.5%, unlike the 3%. That's a positive thing. And also the way you are seeing on the per diem list being listed to 10,000 is also a positive thing. But on the other issue is that they are taking what you call medicine, let's say low inputs of raw materials that are used to manufacture all these pharmaceutical products. Let's say we can take an example of Apiriton. There are those ingredients that are used there for them. They are now turning all the ingredients from zero rating to exempt. Now that medicine will also be expensive, and you know we are also having health charges. By turning all those inputs to now being exempt, as I said, now that cost, all the cost that is incurred is pushed to the consumer, unlike when it's related. So we don't have to advocate for that. Then I can go to now the way usually saying that, I think my colleague here is saying that if you don't have something to hide. But do you trust even the care official having your data? You might be having some loans, you might be having other transactions, but you know, we shall say that privacy. They might also expose the issue of that data, that competitors. I can take an example of betting firms. Betting firms have different policies for them to win to the market. Also, other consumers, let's say other big companies, have also their trade secrets. But once you are able to access their banks, you can be able to see who is their main supplier. So now you can even now steal that data and sell to their competitor. So we don't advocate for that because, as we have said, we have a lot of compliance issues. The EFE teams, we are now coming to already after populated. So we don't see the effect of them accessing my data.
So, as KRA, from where they sit, there are people who are evading taxes. There are others who are underreporting their earnings. How exactly do you now nab these people, so to say, without going into a data safety issue? Any takers on that one?
Okay, top of the head, I think eTIMS, as my colleagues have said, eTIMS is a fantastic innovation because it gives KRA visibility in transactions that are being carried around left, right, and center, even the ones that have been previously hidden. Because if you give a service to, say, a corporation that pays taxes, and you raise an invoice, if you are not registered on eTIMS, that invoice becomes invalid. In fact, you can't even give them an invoice that is not an eTIMS invoice. So when you raise that eTIMS invoice, it gives KRA visibility in what you're doing. If you've been previously playing around, making lots of money and not paying your dues as a citizen of the country, then you're exposed. So that's the other thing. And then, of course, like my colleagues have said, there's also this other way where people who are not tech savvy can still be onboarded on this eTIMS platform with the invoice being raised by not by the vendor, but by the recipient of the goods and services that have been provided. So that's one way. Yeah.
Thank you. Any other way, Kanye?
Yeah, I think two things. Number one is simplifying compliance. So it should be easy for anyone who's doing business, be it you're just an Uber driver as an example. It should be very simple for you to calculate how much tax is due from you and for you to also pay it. I think they had started even with USSD platforms, so that I just press star something hash, and then takes me to a platform where I just say, this is how much I've made, and this is the tax that is due. I just pay from my phone, M-Pesa, done. So that's one. Two is tax education. I think there are people who are not complying because they don't simply know how to comply, when to comply, or what their obligations are. So that can be enhanced. The same way they go to the constituency level when they want your votes is the same way they should go to the constituency level when they want to collect your taxes. Yeah, so that tax education needs to improve. And finally, of course, we need to deal with this thing of tax apathy, to basically encourage all of us to continue to pay our taxes as we should. Like Kafafa mentioned, it is our civic duty to pay the tax. There's no one who's coming to support this country from outside. And if they're coming to support it, they are coming to support it with interests that they have, actual interest, and even interest in, if they give us money, they want some money back with something on top, yeah? So we basically have to take charge of our country by also supporting it through paying taxes. Yeah.
And of course, for people to trust the government and actually be open to paying their taxes as they should, they need to see what the money is doing for them, as you had said earlier. So let's talk about where this money is going. People pay their taxes. There is 1 trillion of debt that he mentioned. It's maturing in the next financial year. We have around upwards of 10 trillion shillings in debt cumulatively. This hole that we are in, and it seems we keep digging it every other year, will we ever get out of it? I'll start with you.
If I can say, the only issue that we have in Kenya is the issue of expenditure. Because we can see unnecessary expenditure. And maybe you can see, you have seen on the media nowadays that there are this public participation, and they are also costing taxpayers money. If some of these policies, we are seeing people, let's say a member of parliament calling, let's say 50 delegates, and then they are flying their helicopters and all that. You know, all this issue relates on more on expenditure. We have what we call misapplied priorities. Now, we don't need to do all these public palaces and all the taxpayers' money and flying all these hired cars and flights to those places. So, which comes first now? The way we are seeing on the issue, they have already allocated more on education, more on what we call health, is something that we need to prioritize. The expenditure, the issue with this budget is that the issue in Kenyans is that more is used on unrequired priorities, and also the expenditure is also an issue. Yeah.
Expenditure is an issue. Your thoughts?
Yeah, I think just to add to that, yeah, I think if you look at it from a totality, yeah, so from the 4.2 trillion that they plan to collect, you see about 60% going to recurrent expenditure, and about 30% going to pay back the loans. So what that means is it leaves very little money for you to be able to develop. And the biggest issue with having to borrow money for non-development expenditure is actually very dangerous, because what that means is at a future time you will still be required to pay that loan with a little more interest, and at that time you will still rely on the same taxpayers to be able to fund that interest and to pay back the principal. So the question is, if you don't put the good money to use right now, such that you know you can put it into roads, that it's going to reduce the cost, so that companies have more money to be able to pay taxes, you know, and expand. So it should be sort of that the government is actually really in a tight spot, in the fact that we are already where we are. We're almost hitting the cap. Actually, there's some reports that it has actually been exceeded, depending on how you look at it, if you add parastatals and all that. Yeah, but the point is that, yes, it is a very big issue, and I think it should be a point where the government looks back and says, okay, we are already where we are, but how do we get out of it? And I think that should be the biggest argument, and not just try to, like everything is okay. I think that there needs to be some thinking about how to reduce that expenditure. And not only the expenditure itself, but also find out how we can get better terms and better loans from other maybe governments, grants, and all that instead of going for the more expensive loans like the Eurobonds.
Thank you. Thank you for your thoughts, Kafafa. Thoughts on debt?
It's an interesting conversation because the government is caught between a rock and a hard place. For it to finance its obligations, it needs revenues. Ideally, taxing is the source of government funding, of all government funding, even without borrowing. If we can get to that ideal, so good. I mean, if we can get to that ideal, that is the best scenario possible, but we are not able to get to that ideal. So what happens? Whenever there are revenue shortfalls, the government has to borrow. So borrowing, of course, now if we borrow irresponsibly, as has happened in the past, then we put the burden on the generations that are to come, future generations. I'll give you an example. Past borrowing, we kept sounding the alert that past borrowing was a little reckless, a little irresponsible, and we kept looking at the debt to GDP ratio at the time, which was at about 50-something%, edging towards 60%, which is the acceptable threshold for developing countries such as ours. But those in authority didn't listen then in past times, and they borrowed to the extent that at the time the last administration was exiting, debt to GDP was at an all-time high of 68% at the time, which brings the question of unsustainable debt. Now we are in that situation. We have this debt that has to be repaid. It's an obligation that the country has to make, because those are sovereign loans. There's no other way around it. The ideal, of course, again, like I said, is to tax people to repay our debt. That's the ideal. But when you tax people too hard, they feel caught between a rock and a hard place and they react. So what happens? Then you go back again to borrow to bridge the deficit. So that's where we are, between a rock and a hard place. But I keep saying that an honest conversation is needful. And as he has mentioned, we need to educate the public about where we are and the way forward. Yeah, we need to also sensitize them on some things, perceptions that people have of government spending, in the sense that they think it is irresponsible. I'll give you an example. Look at the amount that has been set aside in the budget for the renovation of State House. To the ordinary citizen, that looks like looks like a misplaced priority, irresponsible spending, because the ordinary citizen imagines that these renovations are all about redoing the interior of State House to the occupants' fancy. You know, that's not it. State House was built over 100 years ago, and it's in a state of disrepair at the moment. It's actually falling apart. It's a national monument. It's part of our heritage. And we, as a country, ought to preserve some of these monuments. And there's a plan to that end. I think it's a 10-year, or is it a 15-year plan that was started by the last administration to allocate money every financial year towards the repair of State House. Because a national monument is a place where heads of state are entertained. We can't have them entertained under leaky roofs, or, you know, windows carved out and that sort of thing. We cannot. It's our national pride as well. So when allocations are made to that end, they are not misplaced priorities. They are actually necessities that ought to be done. But has the public been explained to sufficiently enough for them to grasp that? If we don't have clear communication, then the result is chaos. The result is a perception that the government is irresponsible.
I think the question that the public is asking itself, or people are asking themselves, is why do we have money to allocate to the renovation of State House, yet people like medical interns are not being paid? Healthcare is in shambles in a lot of counties. So people are wondering, it almost feels very elitist, so to say. It's like up there they are eating well, they are living well, but down here people are dying in hospitals. There's no healthcare, or education is also problematic. So please, Kanye, I'd like to hear your thoughts on this.
You know, for that State House discussion itself, the problem is even in the magnitude of the amounts which are being set aside. You know, I don't know whether we're talking about 300 million as an example. And every year there's budget to renovate the State House, yeah? So you can imagine what that amount could do. It's money to buy a whole piece of land, build new properties, actually furnish them and have them with everything excellent, nice. So if renovation costs that much, then you definitely would want to ask a question, do we really need this, and is it a priority? If it was something, a less significant amount, maybe people wouldn't be so much worried about it. But the other measures that need to be done, we've heard about austerity measures saying we'll reduce the kind of delegations that you're sending out and people traveling. That is said by mouth, but in terms of implementation, we see a problem. Yeah. At some point, just after the Gen Z protests, we saw some real results. There was curtailed travel. Right now, I don't know where we are with that. Number two, we need to think about restructuring debt in terms of how much we are carrying and whether we are carrying it in foreign currency vis-a-vis local currency. And basically here, what we are trying to look at is to make sure that we are not exposed to, foreign exchange and the way it plays around. The value of the shilling today is perhaps good, next time is not that good. So that's something we need to look at. The other thing is we must have an honest conversation about restructuring government. The conversation has started in terms of looking at parastatals and state agencies that do similar roles, and we want them collapsed so that we reduce duplication of roles and basically also reduce how much we are spending in these government offices. We have to think about whether we still need 49 MPs and 47 governors and about 1,000 plus MCAs and ETC. When we started with the Constitution 2010, we thought of this as a very good thing to bring inclusivity, ETC. But it's time we have an honest conversation as to, are we able to support that kind of government today? Or could we reduce some of these positions and still provide services to the ground? Because we still maintain the intention of devolution. The other things we need to look at include, of course, that is tied to the staff element. The last one I wanted to mention is corruption. We've seen the Auditor General issue reports, uncounted, just saying we are seeing wastage. I think just yesterday, I was looking at a report that was being mentioned that NSSF spent $2 million to buy a reception desk. And to think of it as it's money that has come out from me, contributing to NSSF, and then you spend that amount of money to just purchase a desk, you kind of feel very, disappointed with the kind of spending we see. So with it, maybe we need to ask ourselves hard questions like, is it time we introduce stiffer penalties for corruption and wastage of resources? Is it time we introduce a life penalty, as an example? I know that is radical, but I think there are countries that have gone that route. And for those countries, perhaps they are seeing the results. And what we see is nationals of those countries then come to Kenya, where we are not so strict around corruption and the penalties for it. And therefore, they're just doing their businesses as they're doing them here now. So these are the kind of conversations that we need to have so that then we ensure that whatever money is raised through taxes, through borrowing, is then utilized well. And if it's not done like that, then there are penalties for it.
Right. Kanya, I know we need to release you in about 5 minutes, so I'll give you a few minutes to just give us your closing remarks. Then when we come back, I'll remain with the rest of the gentlemen to talk about matters corruption. Please.
Well, just 2 points. One is, fine, we have the finance bill. Let's continue to engage. The departmental committee that is collecting comments, I think today might be their last day, or I think they're going up to 11th of June. To basically continue collecting views. So let's engage. We've seen some good attitude by the departmental committee. Basically, they are listening, they are asking questions, and we hope that that is what will continue up to when they prepare the report and up to the discussion in Parliament, so that whatever is basically not necessary to be within the bill, then it gets removed to remove this unnecessary tension that is already building up. So that's on the finance bill side. On the expenditure side, I think that conversation needs to continue. Even though, for example, CS and the team have asked us to provide comments, there are things they already know in terms of what is the public sentiment around how we are spending our money. If they could come out and say, we've had you before, you've given us these comments before, and these are the changes we have done, and we commit to continue building on that, perhaps that will also encourage people to basically support the regime that we currently have. So with those few remarks, I'm really grateful to be here.
Thank you, Kanyi, for sharing your thoughts with us. That is Alex Kanyi. He is a tax and exchange control partner at CDH Kenya. I shall be remaining with Kenneth Kahora, who is a tax manager at PKF, Leonard Kafafa, governance and policy expert, as well as CPA Dennis Mutitu, who is a member of Public Finance and Tax Committee at ISPAC. And we shall continue this conversation on the 2025-2026 budget in a little bit. BizCheck takes a quick break. Do not go too far.
Je, umewahi kuwa na deni ya KRA? Basi usiwe na shaka. KRA wakishirikiana na KBC wamekuandalia roadshow murwa kabisa. Jiunge nasi tukufahamishe kuhusu KRA Tax Amnesty Program na jinsi utakavyoweza kusamehewa adhabu na riba na KRA. Pia tutakuwa tunakusaidia kujaza fomu za kodi za mwaka 2024 na kukusaidia na huduma za KRA kwa mtaa wako. Ijumaa tarehe 6 mwezi Juni tutakuwa Kilifi. Tutazuru maeneo ya Sauti House kupitia GPO, Bondeni, Coast General, Nyali Bridge Bombolulu, Kenol Nyali, Shanzu, Mtwapa, Kilifi Market, Pwani University, Gede, Matsangoni, Malindi Town, kisha tumalizia Malindi Stadium. KRA, tulipe ushuru, tujitegemee.
Say the art without art would just be, get it? We circumnavigate the globe and traverse the local scene to bring you art and culture at their very best. From fine art, culinary art, performing arts, and even cultural events, you name it, and we have got you covered. My name is Kevin Kasioki, and I will be serving you this and much, much more each and every Friday at 8 p.m. only on KBC Channel 1.
Katika Qur'an tukufu, Allah subhanahu wa ta'ala anatuamuru tukumbushane, kwani kukumbushana kunawafaa waumini. Kwa mujibu wa hadithi, Mtume Muhammad sallallahu alaihi wasallam anatushauri tueneze ujumbe wake angalau kwa aya moja. Basi tunatia ari kufanya ambacho ni jukumu la kila Muislamu, kukumbushana mema na kukatazana maovu. Tunakuletea mawaidha za mashehe, wataalam, maustadh, madrasa, makala spesheli na Ukti Fatuma Yakub, mafunzo na historia za mitume na maswahaba, na burudani kupitia nashid na wasifu za munshid. Tazama ukumbi wa Kiislamu nami Alishe kila Ijumaa saa 9:30 katika KBC Channel 1.
Thank you for staying with us on KBC Channel 1. This is BizCheck and we are in the second hour of the program. My name is Betty Kiptum and Lensa Odingo is my colleague on the sign language interpretation. She should be coming to your screen in just a little bit. In studio, we are having a conversation on the 2025-2026 budget. I am with CPA Dennis Mutitu, Member of Public Finance and Tax Committee at ISPAC, as well as Kenneth Mahora, who is a tax manager at PKF, and Leonard Hafafa, who is a governance and policy expert. Thank you for staying with me, gentlemen. Let's talk about corruption. There have been quite some measures in this country to curb corruption, including the formation of the EACC. The Office of the Auditor General keeps giving reports year in, year out, and things are, glaring mistakes happening there. I would like to hear from you what you think in terms of the possibility of actually tackling corruption in this country. I'll start with you, Leonard.
Corruption is not new. It's systemic. It's been ongoing from the days of our founding fathers. In fact, it's Mwai Kibaki who first put a finger to it when he said that a third of the budget was lost to corruption in his administration. But his rider was that it was incumbent on the government to make do, to put proper use of the 2/3 that were left. Uhuru Kenyatta continued with the same script when he said 2 billion shillings was lost to corruption every year. When you do the math, there's about 60 billion shillings a month, coming to about a third of the same 1.8 trillion shilling budget in his tenure, at the beginning of his tenure. So he acknowledged as much. The Auditor General, of course, has also lent her voice to that, saying that we lose a third of our budget to corruption. So it's something that has been ongoing, and it is systemic. As I said, it is systemic. Systemic meaning it is embedded within the system so that it's not easy to route it out overnight. Tackling corruption has to be approached again systemically, because it is systemic. Let me give an example of systemic corruption. Say you have a tea girl who works in your office, and you have a milk budget that you allocate to her every day, and she comes and she tells you that milk, say, will cost about 320 shillings for 2 liters. That is in a prime supermarket. And you allocate her that amount every single day. But what does she do? She looks for a vendor of raw milk and buys the same milk, say, for about 80 shillings a liter, and pockets the difference. At the end of the day, you get your tea. At the end of the day, she comes with receipts from wherever wherever she gets them. So when you do your accounting and everything, you're okay. But what has really happened is that corruption has taken place. You've lost a significant amount of money. The differential between 320 shillings and 80 shillings is what she pockets, and that is corruption. It is systemic. So when you do your audits, you can't pick it out. You won't pick it out in an instant. For systemic corruption, we need technology. We need to leverage technology now to be able to get rid of systemic corruption. I've seen a number of measures proposed by the CS Treasury, basically, even at the government level, to try and tackle corruption. He's talked of things like zero-based budgeting, because we lose quite a lot of money through the current system that we have, which is called accrual budgeting. Accrual budgeting, when you do your budget, when you do your numbers, you start off from where you left off in the last budget. So if you bought, say, 100 cars in the last financial year, when you start off this year, you budget now for another 100 cars. Yet those 100 cars that you bought last year are still functional. So in zero-based budgeting, you start from zero. You assume that you have fresh needs each year, and you're starting from ground zero. You don't need cars because you bought them in the last year. So you only work with what you need. So all those vendors, all those car vendors and everything who've been making a killing by selling government cars that they don't need are now caught. I mean, they are exposed, and the corruption now is minimized. So we have such innovative ideas basically being advanced by the CS Treasury to ensure that systemic corruption is curtailed. Yeah, so that's my take.
That's your take.
Yeah.
Yourself, CPA Dennis?
Yes, if I can start with the way also the every president keeps on saying that there's corruption this year. So in general terms, that corruption is budgeted, as we can say. The way usually you have the approach, you know, nowadays you have seen the Gen Z movement on the issue of that we are electing people with integrity issues. You have an MP who has taken out of CDF money, or a governor who has already has integrity issues based on the fact that he was able to, let's say, procure illegal goods and also has some, what we call, generally, I'm trying to say that when you talk about the corruption, it starts with the big guys. Let's say the ministers, the CS, the MPs, the governors. So generally, as my colleague has said, the issue of accrual, I can touch the issue of that we have so many, we are paying bills, let's say pending bills. We are paying pending bills for goods that were not even delivered. We have those procuring guys at county levels, where someone, we say that he delivered there. You have that term that being supply alipeleka hewa. We have that term that being used because we don't have what we call the checks and also controls that if once someone procures a thing, we're able to do verification, and that's give rise to what we call pending bills. And I think ISPAC was able to push the process that the accounting concept. You know, before usually with the public, let's say those counties were able to report under what we call their financial reporting was on cash basis, but now it went to accrual. What we mean by cash basis is that any debt that was there after the year end, let's say the year end is June, was not also brought forward to the next year. So you didn't know that, let's say, people who were supplied this year were this amount, were this much, and we have a liability of this amount, let's say the creditors. But now we have what you call accrual. Accrual, you carry on all those balances. Maybe you might see the debt in 2014 in your books, but before you didn't even recognize a debt, let's say last year debt. So even the Auditor General was able to change that the way counties are reporting, they changed from being cash basis to accrual. And then I think what he was trying to explain is that you can now be able to trace all these pending bills. Also, the way we had suggested is that the corruption is based on everyone. I think the giver and the taker are all the same, but it takes more from the senior guys, because the corruption done by a T-girl, you cannot compare it being done by a governor. So generally, the two things are corruption, but the magnitude being done by a governor, stealing, let's say, 600 million, yet you see them being arrested, side issues, then the next year he seeks for the election. So generally, we have issues doing integrity, and that's why youths are coming up to gauge that.
Okay.
Yes.
We seem to be a society that rewards such behavior. We have seen quite a number of people involved in these scandals moving from the lower level where they, were involved in corruption, and then they are promoted. Some are elected into big offices. Please, your thoughts, Kenneth, on how to tackle this corruption issue.
Yeah, my take on this is I think we really need to look at the root cause of this. So there has to be something that is actually fueling the corruption. Yeah. So let me give you an example. If on my way here, and I sort of take a wrong U-turn somewhere, and the police officer stops me, and he says that you have actually made a mistake. So for you to say that, okay, well, let's tackle corruption, you need to be willing to actually go through the process. Yeah, to be arrested, to go to court. And so there is a problem in terms of people wanting the shortcut, yeah? And another thing is, as is given, there are the examples, you see it happening and people getting away with it. And it becomes, the issue of corruption is just that it's not my turn yet, yeah? So you have a lot of people, even as you're talking, you hear that people only want corruption when it works for them. But the question is, there needs to be now that, is everybody willing to actually go through the tough route, yeah? if it takes you 1 month to get your license, are you willing to wait that 1 month? Or will you want to find somebody who can give it to you in 2 weeks? Yeah, so in more efficient systems, we've seen that corruption is actually it's been eradicated by having very good efficiencies. One thing that he gave an example. Another thing I think we've seen the centralized procurement that is getting rid of some sections of procurement. You have, if a table was being procured for 50,000 here, there is no other department that should be procuring it for 2 million. So it is some of those systemic things that need to be sort of corrected. And another thing is there also needs to be some punitive laws that anybody who's caught in it, such that the pain of you being caught in corruption, it's better you'd have just waited a month rather than being try to cut it by 1 week. Whatever you'd have benefited from those 3 weeks of business are less than what the courts would actually charge you. So I think it needs to be, we need to just have a common agreement that it starts from me, it starts from you. And once you can end it from from you and the next person, then it becomes an easier conversation in terms of getting rid. Because everybody will follow the way, everyone will follow the process. And then incidences of corruption will also reduce. Yeah, so laws and getting into terms with the fact that we only talk about it being an issue when it's somebody else. When it's us, no, don't come here.
Yeah, Papa, you're nodding.
Yeah, I agree. Yeah.
Are you in agreement with that?
I agree, yeah.
Uh-huh.
Yeah, if we implemented Chapter 6 of our Constitution on integrity, if we implemented it to the letter, then a lot of the leaders that we have at the moment who are quote-unquote unethical would never actually even profile themselves for leadership positions, elective leadership positions, or just leadership, even appointed leadership positions. Mm-hmm. Yeah, so I agree with what he says. We need to be, as a nation, actually, we need to reset ourselves, our values. We have a value reset that is coming, because our values are just left all over the place, left, right, and center. But again, riding on what he has said, I think we ought to leverage technology, like I'd said earlier, but leverage technology in a way that makes it easier to either punish corruption. You know, there are those petty misdemeanors, say like a traffic offense, you know, you ran a red light or something. Mm-hmm. That should not necessitate you being taken to court in handcuffs, which is the practice at the moment. You are arrested, you go to court, you're taken through the basement and everything with other hardcore criminals before you're hauled up to the magistrate to answer to a traffic offense in handcuffs. That is unnecessary. It's a civil issue, and it should be dealt with either by a spot fine, or just let off with whoever offense should be let off with a warning. So when you minimize those, avenues to engage in corruption through things like spot fines, through tickets that are issued, I think there's that initiative that is being undertaken at the moment, where you get tickets where you get an alert on your phone because you overspeeded, and you're told to pay this amount of money by M-Pesa and that sort of thing. So it minimizes corruption. So again, leveraging technology, like what my colleagues have also said, accrual accounting, which basically takes care of this issue of fictitious spending bills, zero-based budgeting, so that we start from some place where our purchases are not vendor-driven, where we have to buy things that are not necessary, and e-procurement, electronic procurement, where everyone has visibility in the procurement process, and where any anomaly is spotted and properly sanctioned by the law. Mm-hmm. Yeah. So
where is this turnaround supposed to start? Because there's the systems and the laws that are supposed to be in place and actually implemented, and then there's the moral side of it, the people actually choosing to, to do the right thing. Who is supposed to start this process?
In terms of systems, I think the systems are ongoing. I've looked at the budget, and one of the things that they've said is that there'll be fiscal consolidation, which means there'll be an attempt to control revenue. There'll be an attempt to increase revenue. The first part of our discussion focused on that by widening the tax base. And then there'll also be an attempt to reduce expenditure on the part of government so that wastage is avoided. And these things that we are talking about, these are proposals that have already been advanced, are already being implemented by the CS Treasury. things like e-procurement, zero-based budgeting, I think starts with this budget, and accrual accounting. So these are things that are already in place. Now it is up to we citizens, to reset our value system. I don't know how that is going to happen. Maybe we'll go back to the days of Nyayo, where we used to sing patriotic songs, to foster that feeling of pride and patriotism in being Kenyan and in doing the right thing and in looking out for each other, and not amassing wealth illicitly. We need to reset ourselves to that era where hard work was valued, appreciated. Not this era where when you steal the most, you're the one who is celebrated and you work yourself into leadership. So we need that reset.
Right. Any thoughts on that?
I think, Betty, our focus should be more on leaders you are bringing up. The issue of someone has some integrity issues, but on the other hand, do we have that light to control all this? In one hand we have, the other hand we don't have. The issue of that someone, we are not the one who vet all these leaders. They usually go to a process, the IBC section, the KBT, the EACC, where they usually clear them to learn for these services. And I think this much has now come to an issue that the youths in this country, the millennials and I think the Gen Zs have come up with the issue of that they want to control and also to take position on this kind of elective positions. And I think we have seen the issue of now how they are saying that we want to elect people with integrity issues. We also want to elect people whom have, let's say, they have our take on their heart. So I think these things always starts from it must start from us ourselves, but on the other hand, the government must also help the Kenyans because of these selections and then also on the vetting on vetting them. So we have a right to elect good leaders, and on the other hand, as I said, that these people have money. So when they come to those villages, they're able to bribe even the voters. So generally, civic education, and as well as the way we are saying that we have proper controls and proper vetting on these leaders.
Right. Kenneth, in terms of accountability?
Yeah, I think at the end of it all, it is still going to be a drastic change, yeah? So when it talks about accountability, the question is, you're accountable to who? You're accountable to the taxpayer, but what recourse is there? If you go ahead and, yes, very well, we have all these bodies that can be there to make sure that you're doing things, but if there is no recourse to it, then you're just doing it's a show, it's all a facade. Yeah, so at the end of it all, I think it just needs to be a drastic change. As you're seeing, when you bring in technology, you can imagine how many people are against that technology. Because before something like, when tenders were brought, all you needed to do for you to be able to disqualify a tender is just pluck out one page or remove one document. So you see, when you bring in technology, there are a lot of people who are going to be against it because it is what they used in their benefit. Yeah. So it is some of those things. It won't be an easy journey, but we have to start somewhere. Yeah.
We have to start somewhere. Thank you. I would like us to now shift focus to, well, the government is supposed to create an enabling environment for businesses to thrive. Based on what you're seeing in this upcoming budget and what the government has been doing, say, for the past 2 years it has been in office, do you think this government is focused on expanding business, enabling business owners, businesses, especially small and medium enterprises, to thrive? I'll start with you, Kafafa.
Yeah, I mentioned at the beginning that in this budget there is a provision for small businesses to deduct the cost of tools and equipment within that year of trading. So as a small business, when you purchase your tools, when you purchase your equipment, you are allowed to deduct it from your tax, or whatever it is that will inform your tax liability. That's a positive. That's encouraging. Then, of course, at the onset of this administration, they had a loan for mama mbogas and boda riders although that loan has been abused because people have taken it up and they haven't, the repayment has been sporadic or slow, and just no payment in some instances. Yeah, so for me, this provision, I mean, there are, because challenges to small businesses are usually financial. Yeah, for the very small businesses, at least there's a way out. I think that fund has, since the Hustler Fund has been enhanced. I think there's, if I'm not wrong, there's provision for it to be enhanced in this budget, the Hustler Fund. So that's looking out for the small guy. But the small guy also has the obligation, and they need to pay their taxes. And I think there was a proposal initially to have this turnover tax. I think it's still there. Turnover tax is still there, and it is 3% of anyone's turnover. So it simplifies tax administration. It simplifies the understanding of the small guy, so that he's able to, instead of working with accountants to have all these complexities, filing returns or paying their tax and filing returns, it's just simple for him to calculate 3% of his turnover and to pay their tax. But now enforcing that is where the challenge is. But the incentives are there for small people and businesses. Yeah.
The incentives are there.
The incentives are there.
Right. Dennis, what are your thoughts in terms of supporting small businesses to thrive?
Yes, I think under this bill, there's those proposals that you can see, generally they are going to kill some of the sectors. Like now we have for what you call Buddha sector, that I was able to see an electric bike, I think around 2 years ago, and maybe my colleague can testify that most of the people are able to see those electric Buddhas and electric buses around 2 years ago. But now, changing them from zero rating to exempt, you are also increasing the issue of, as I had said, that you're also increasing the cost of even buying them. So it's a new sector. Why don't we wait for allow, let's say, to be able, the sector to be able to have muscles in the society, and also to be already to be competing with other sectors, let's say the diesel cars and petrol cars. So some of these policies are also be able to shift the issue of now the way exempting it was zero rated, now they are exempting what you call this farm inputs, and also the issue of also exempting pharmaceuticals. And you see, those necessities that you have to do on with you have to have them day-to-day activities. So generally, the government is also trying to, despite them not raising any taxes, indirectly it is also killing some of these sectors. So as I can say, the way my colleague is saying that turnover tax, I think the rate is 1.5%. It's not 3. So the issue of the turnover tax being from 1 million to 15, it was raised to 1 million, from the sales above 1 million to 15 million. You can also be able to shift to VAT. But that does not increase the issue of how much disposable income do you have. And that's we are now trying to figure out that most of our Kenyan economies are below. We usually say they live hand to mouth. So we leave some of these sectors to enable us to grow. I think for now, we don't have to do all these exempt, zero-rated exempt. We just cut off the issue of expenditure, and we remain the status we are. I think I was talking about the dairy meal and dairy meals, and also all the meals that are related to the poultry and
animal feeds.
Animal feeds are being moved from zero rating to exempt, and also they increase the cost. You have seen another day that people are importing eggs from Uganda. So people now we are killing our local market, and now advancing people to go to fetch from other markets. So for now, we don't have to do all this exempting all these goods. We can wait, and then we try to cut off the issue of expenditure. Then we are good to go. We don't need to tax mama bogas, and as we can say, we are indirectly taxing.
Yeah.
Despite the taxing, it's not that we are raising taxes, but we are indirectly taxing them.
Right. You brought up the issue of animal feeds, and we know that a lot of the cost of production in Kenya for food is high because of the cost of production of animal feeds, which makes it expensive. And now this move to move it from zero rated to VAT exempt means that they'll be more expensive. So food is going to be more expensive. Anything, because that cost will be passed down up the value chain, so to say. I would like to now hear from you. For a government that says it's focused on the country achieving food security and all that, and moves like this is like speaking with two mouths, yeah?
Yeah, absolutely right. Maybe I can give another example.
Right.
With the government trying to revive the sugarcane industry. So one of the proposals we've seen is that the transportation of sugarcane from the farmer to the factory previously was exempt, or zero rated, and now they want to move it to exempt. And so what this means, it was exempt, it's been moved to standard rated.
Okay.
And what it means is that this farmer is actually going to be charged VAT on the transportation of sugarcane. So we know we're at a point where the sugarcane industry is really struggling to actually to revive. Yeah? So at the same point, when you see a government policy that sort of indirectly affects that person, then it leaves you wondering, where is the policy? Are we trying to favor the farmer? Are we trying to collect taxes? So it cannot be one or the other. The issue of animal feeds is actually very critical, because we're talking about milk, we're talking about eggs. These are things that actually come to our plate. So yeah, the issue of food security, I think, has also been an issue for this country for quite a while, especially seeing how the rain patterns have changed. And we won't even go to the issues of the inputs that are used in the actual farming, some of them not meeting the standards that are required. So we see it's actually getting very hard for the farmer and for the guys really down there to be able to make a living out of what they do. And I think it's high time that the government would want to, sort of favor some of these low-income like the farmers. So the question would be, are we incentivizing them, or are we actually just going to tax them? Yeah, we know there's actually the framework, the national tax policy that was talking about how the government intends to reduce expenditure, and so that will mean eventually all the goods will move from exempt or zero rated to standard rated, with the exception of maybe just exports. So we know exactly what the government is trying to achieve, but at the same point there is a place where we are sort of stuck. The sugarcane industry is not doing well. Why don't we incentivize it and not do anything that is going to affect it even more? Yeah.
So Fafa, you said the government is in between a rock and a hard place,
yes,
yeah?
Yes.
You want to ensure that businesses are booming and growing, but at the same time, you have to collect taxes.
Right.
How do you achieve that balance? If you were, assuming you were coming up with this budget, what would be your priority areas? It's
actually a juggling act, a major juggling act.
Yeah.
Let me just circle back to what our colleagues have talked about, because they've talked about agriculture,
right,
and the fact that some inputs are now moving from zero rated to tax exempt. But you also realize that the government has subsidized agriculture quite substantially, particularly when it comes to inputs like fertilizer. And that's basically the backbone of produce. These feeds that we are talking about are made from grain. They are made majorly from maize. And you realize that before the subsidies, before fertilizer subsidies, we, as a country, were harvesting about 35 million bags of maize annually. Some of it going to feed the nation, the rest preparing feeds for animals, the chicken, the cows, the dairy meal, and that sort of thing. After the subsidy, in fact, in the first year of the subsidy, production rose to about 44 million bags, and it has been incremental every year. I think this year it's expected to reach 60 million bags. Same land, same production. The difference is in the fertilizer, of course, and with good rains, yeah, to boot. But that subsidy is intended to benefit the government. When the government spends on a subsidy, it is intended to enhance revenue collection at the end of the day, because bumper harvest, lowered food, more food available at lower prices, and taxes collected, yeah, all round, because people are now able to pay taxes. So I think that's a juggling act that the government is caught in right now. how much to subsidize and how much to collect from the public. Yeah, so that's the delicate juggling act that the government is caught in right now. Yeah.
Priority areas, if you were to do the budget, where would you put the money?
Precisely where the government has put it. I mean, we are talking of, okay, first of all, is development. For me, development is big. But unfortunately for us as a nation, again, because of the misdeeds of past administrations, we are heavily indebted. And when you look at debt service, when you look at recurrent expenditure, you discover that there is hardly anything left for development. But yet development is key, is a key driver. Government spending is always a key driver of the economy in this country. So the way they are approaching it using PPPs is the right approach, where you don't put any burden on the exchequer, and you recourse to funds from the private sector in partnership with the government to finance key infrastructure projects in the country. So that's the direction. I'm happy with that direction. Like I've said, I realize, unlike most people, I realize that this government is really operating in a tough environment. But they are trying their best to do something, to make something out of it. So PPPs is the way to go. PPPs
is the way to go, like they're doing with the Nairobi-Mombasa Expressway?
The Nairobi-Mombasa Expressway, that's a PPP, and I think there's shortly coming, I think in a couple of months, is the Rironi-Mau Summit Highway. That's the great part of the Great North Road.
Right, of course, if we had taken that direction much earlier, maybe our debt situation would not be as bad as it is right now.
Definitely.
Right, right. Your thoughts on that?
Yeah, well, yes, I agree with you, Kafafa. Though there are some of the policies, like if you look at affordable housing, so you see like the incentive that used to be there for affordable housing, those would build 100 units. The inputs that were used in the construction of that were actually VAT exempted. And so now we have this moving to standard rated. And so what this means is that for some of those affordable housing projects, it means that it's going to become more expensive to do them. So yeah, and I know there's always an argument is that, was it actually achieving its intended purpose? I think that they need to be looked at if it did not meet its actual intended purpose. Is it the fact that, is it 100 houses too many? Should they have said maybe, should you do 50 houses? Because the whole idea is the government should actually not be involved in some of these projects. They should just create an environment where we have people who would actually come in to do the investments. You look at something like manufacture of local motor vehicles. That's another thing. That is the incentive. There was an incentive that get a lower tax rate of 15%, and I think the inputs were also they were exempt. Yeah, and so what this means that is when you move them from zero rated to exempt, it means that now it's going to whatever inputs that they were incurring to do these activities, they are not able to recoup that, and it ends up being more expensive. So we are talking, yes, we are seeing this, the electric motor vehicles, electric buses, a lot of these are being affected indirectly. So you look at it and it is working against trying to build those specific industries. So I think there needs to be a balance, is what do we stand to gain vis-a-vis what do we actually lose. In a place where we are dealing with a lot of unemployment, and we know that we want to generate more projects so that the youth can actually have something to do and earn income that will actually contribute to what the government actually, and so there needs to be a cost-benefit analysis on what are we going to collect when we change something from exempt to standard rated, or from zero rated to exempt. What tax are we planning to collect? Vis-a-vis how many other companies are we disincentivizing? Another very good example is the tax losses. Now tax losses, they're proposing that they'll expire in 5 years. So it means that anybody who wants to come set up a business here, especially a capital intensive business, will be thinking twice about it. If I'm not able to recover these losses in 5 years, then whatever incentive I've even been given is pointless, because after all, after 5 years, I'll not be able to. So if I got a very good investment allowance and I'm not able to recoup it in that period, it means that it gets lost. And businesses will sort of think twice about investing here. And you think about businesses, they can invest here, they can invest next door neighbor. So it's also important to look at it from a regional perspective, is how are we doing in terms of the industry? Whatever policies are we doing, is the industry actually going up or is it coming down compared to the other places? I think there was something about the manufacturing industry we were seeing. In Kenya, it has actually reduced and it has gone up in Tanzania. So it means that the people who would have invested in Kenya probably took the investments to a different country. Yeah.
Right. Your thoughts?
Yes, I think as I was starting, I touched on the issue of tax policy. Do we have a proper tax policy in Kenya? And, if you can remember, the president was advocating more on conservation of the environment. I think he also had to ride using that electric vehicle to, I think, to the parliament. So he was the one more advocating on the issue of how people can invest more on these electric vehicles. And I think I've said that you don't even invest in Kenya. Then the other day, an item moves from zero to VAT exempt, from VAT exempt to standard rate. So on these policies, the way we are saying is that we need also to have a clear policy guidelines on such a way that this product might be affected, let's say, after 5 years, for ease of planning. The other issue is that he was saying on the issue of losses, you set up a company today, and some of these companies are capital intensive. We can take an example. If you want to drill, let's say, those people who are drilling fuel, it might take 5 years investment. Or someone setting up a company, it might take 3 years to 5 years before you even start operation. So, meaning these losses, you only carry them for 5 years. The policies that are being put in place generally affects more on the investors. So, if we can have a clear policy guidance, a clear policy framework, we will be able to proceed well. And also, the government should focus more on the low taxpayers. That is the mama bogas and the unemployed people. And the issue of this, you have seen that, I think Buddha Buddha came up with Kibaki, and we have seen that many people have now become employed. I think, Betty, even you might even have taken a ride using a motorbike. So generally, these people were unemployed before. And then now you are also coming to the way they are now advancing to have the electric motorbikes. You're now trying to exempt them, meaning that they will be expensive. Some of them will not afford. So we might have these policies affecting even the future investors. So I think the government should also focus more on other issues, the way to cut on the expenditure and leave alone these sectors that are coming up.
Leave the sectors that are coming up to actually grow and thrive before they start taxing them heavily. Before the president came into power, he was very open about not borrowing. Yeah, he said that he was not going to keep borrowing, but of course you get into the seat and you look at the books and things have to be done. So I'd like to hear from you what it takes to actually live within our means.
From the onset again, we said that the only way to live within our means is to stop borrowing. That's the ideal. And to fund our budget ourselves. Okay. But you saw how that went last year, because the proposal, I think, in the finance bill of 2023 actually, the finance bill of 2023, we had reduced our borrowing, our public borrowing. We had got our public borrowing, in 2023 was about 900 billion shillings. And the proposal in the finance bill of 2024 was to reduce that public borrowing by about 500 billion. I think about 400 billion, so that we had to reduce our budget now, the public the deficit to about 400 billion thereabouts. But the only way that could have been done was through the tax initiatives that the government mooted at that time. But that didn't go well with the public, and the finance bill ended up being rejected. But the need remained. The deficit still remained at 900 billion. So what happened? That 900 billion had to come from someplace. Most of it was borrowed. So that's that's why we said that this conversation has to be had, and the public now has to come to an understanding that if they want to see less borrowing, less external borrowing, or even internal borrowing, then they must be prepared to pay the price of footing government obligations. Let's face it, governments exist to offer services to citizens, and these services have to be paid for. Government does not have money of its own that it uses now to offer these services to citizens. The only way government gets money is through revenue, through tax revenues, or borrowing on behalf of the citizens. So the citizens must pay. They must get to understand that payment of tax is a national obligation. It's not an option. If they want reduced borrowing, external borrowing, if they want the government to stop raiding our local banks in terms of domestic borrowing, they need to take up their tax obligation without taking to the streets in riots and demonstrations and protests and whatever.
Taxes must be paid.
Taxes have to be paid.
Kenneth, your thoughts on living within our means?
Yeah, as said, you have to bite the bullet.
Yeah.
Yeah, so you start asking yourself, what expenditure is this that I can actually forgo? So do we need all these public servants, for example? It's a very hard direction to go. And my perspective on borrowing is that borrowing is actually not bad. Even if you look at the most developed countries, you look at the US, they have very, very large debt. But the question is, what are you doing with that debt? Yeah. Is it debt that's actually increasing productivity, or is it debt that is just being misused? Yeah. And so when you look at it in totality, the question is, people would actually not be afraid to even top up more taxes if we needed to fund that, the total amount from taxpayers. Yeah. The question is, how is that money being collected, being used? We have countries that pay up to 60% income tax and they also personal taxes, and they do not complain because you're not going to pay anything when you go to the hospital. Yes, your children get schooled all the way up to university. And so the question is, I would not even need the money to take my children to a private school or to a private hospital. If this were being provided to us, then I would be able to think of foregoing some of the income that I have, since I will not even need it in the first place. Yeah, so I look at it for, yes, we can live within our means, but it's going to be a journey. And the only way we are going to get to that journey is that we are working to increase productivity so that we can fund our own expenditures. Yeah.
Thank you. Dennis?
If I might start with, is we have seen every government inheriting debt. So I think even this government has really tried the issue of, I can just give my heads up. The way we didn't default any loan, but you understand, I think we had even to borrow from World Bank. The issue of that, most of the debts were maturing, and I think around 2023 and 2024, we had a lot of debts maturing. That's the Eurobond, the China ones and the Tokyo ones. So we had issues to do with the government coming up with the measures, rather than being termed as a defaulter. You know, once the country is being termed as a defaulter, you even lose credibility. No one wants to invest in your country. So the government took a very hard decision to come up with an issue of let's try to borrow and be able to cover some of these debts. I think these debts have been accumulating each year and each year. So meaning that we cannot live beyond our means based on the fact that we had debts, we are carrying forward debts. I think for now we have 11.2 trillion. Let's say when the other government comes in, it will also carry on with these debts and also paying interest rate and principal taxes. So generally for now we cannot, we need to make very hard decisions, but it's close to impossible for a government, since the government has already been inheriting these debts, to really live on our means. We are not close to that.
We're not close to that yet. Okay. Kafafa, you seem to have something to add.
I think we are en route.
Yeah.
The mistake that the previous regime made was to take short-term expensive debt, like the Eurobond. Very expensive and short-term. And the prepayment in one bullet payment. That was a big blunder. what this, and the problem with the Eurobond is that it could not be restructured, because any attempt to restructure, I think Eurobonds have an embedded clause in them. Any attempt to restructure is deemed a default. And as my colleague has said, a default has terrible consequences for the country. So what this administration has essentially done, and I know they've been pilloried for taking on additional debt even when they say they will not take on debt, what it has done is it has taken longer tenor debt, slightly cheaper, to settle the short-term expensive debt. So that is the sort of restructuring that it has done. It's an initiative, of course. It has improvised its restructuring of some of these debts, like the Eurobond, by taking on other debts from the World Bank, from the IMF, with a longer tenure, a lower interest, to settle Eurobond, which is payable in one bullet, and then taken on a smaller Eurobond. I think initially the Eurobond was 1.5, it was $2 billion. It has taken on one for 1.5 billion, slightly higher interest rates, but it's been structured in such a way that it's payable in bits and pieces. It's not one bullet payment at the end of when it comes to maturity. So those are some of the things that the government is doing to get us out of debt. The CS has indicated that we will actually get proper relief in 2035.
2035.
That's when relief will come.
So we keep holding on.
Let's keep holding on. It's tough. It's a tough ride, but you don't have a choice.
Okay. Gentlemen, we are coming to the close of our conversation. I'd like to give each of you 1 minute to give us your closing remarks. I'll start with you, Kenneth.
Okay. So if you look at the Finance Bill 2025-2026, when you look at the Finance Bill, we can see that the government has tried to correct the mistakes it did in the previous year, in such that they tried to get away from a lot of those controversial areas of taxation. But basically what would encourage you is to keep giving your comments, keep giving your suggestions on how the finance bill is. We've actually, in the previous encounters with the Committee on Finance and Planning, they actually do listen. So you actually sit down, you present your proposal, and they listen to it, and they ask questions if they have. And at the point at which the report comes, they actually tell you the considerations they had. And the point is that it is a very hard balancing act, trying to collect revenue, but at the same time making sure you don't overburden your taxpayers. So just encourage all of you to let your voice be heard. Thank you.
Thank you, Dennis.
Yes, if I can, my touch will go to, I think, the viewers as well. There are some of the policies, I think, propaganda going around the social media that there are new taxes like pay is being raised to that 10%. There's what they're saying, diaspora remittance levy. There's nothing like that. I think other people are going to they want to tarnish even the government with other propaganda. So as we can say that we need to read the finance bill, and there's nothing like those policies that are being run all over the social media, saying that there are other taxes that are being put in place. So we read the finance bill, we give our comments, and we try to, we don't give we stick to what is under the bill. Thank you.
Stick to what is in the bill. Leonard?
I'd like to tell Kenyans that paying tax is a civic responsibility. It is not an option. The government has a duty to every citizen to provide services. These services have to be paid for. They are paid for by we citizens. So rejecting the finance bill is not the way to go. As my colleagues have said, there are avenues to make your disaffection known. If you have anything about the finance bill that you do not like, there is public participation. Continue to give your views. These views are being listened to, and they are being accommodated in this new finance bill.
Thank you. Thank you very much, gentlemen. That is the message of the day. Continue involving yourself in public participation. Read the finance bill. Do not be misinformed or disinformed by information online, as well as paying tax is a civic responsibility rather, and it must be done. I have been speaking with a panel of experts here: CPA Dennis Mutitu, Member of Public Finance and Tax Committee at ISPAC, Kenneth Kahora, Tax Manager at PKF, and Leonard Kafafa, Governance and Policy Expert. Until next week when the budget shall be read in Parliament, my name is Betty Kiptum. Thank you very much for watching. Bye-bye.